Good afternoon. Welcome on our conference after Q3 results. So traditionally, we'll start with a short update about quarters, what happened during Q3. Very good third quarter in payment, showing 10% growth year-over-year on operating profit level. And this was driven mostly by e-commerce, processing, and independent networks business lines. This quarter was also continuation of very nice trend in processing. We mentioned this during Q2 and Q1 that we have year-over-year growth, and it was continued. More when we will talk about business lines. Also, as we mentioned, this year Croatia introduced euro, so it was big change for independent ATM network. But anyway, thanks to good performance of our Serbian and Albanian network, overall results of independent network are very good. This third quarter was also very good for dedicated solutions, showing 55% growth on operating profit year-over-year. Pretty stable banking in terms of result, only slightly higher year-over-year. Mostly driven by channels, so multi-channel solution, but also with continuation of our core banking projects, those which we described during Q2 results in Serbia and Croatia. And also continued challenging environment in Turkey, where there is a huge inflation growing again, and not fully aligned Turkish lira versus dollar rate, and this also creates some challenges for price indexations. More about we'll try to tell at the end of presentation. As for the deals, best deals. Few projects for Enact implementation, and not only Turkey, but some other countries of our region in Romania and Montenegro. This is very good information because we managed to go with this solution abroad for European countries. Some new implementation of adaptive elements. This is platform we use for building mobile applications, implementations for banks in Slovakia and Croatia. Also some new projects for omni-channel digital edge solution in Croatia and Serbia, where we did some migration of users to the new solution. In terms of authentication solutions, so free secure project for bank from Bulgaria, covering also branches in Greece and Romania, and also some AML, our own AML solution implemented for bank in Bosnia and Herzegovina. As for dedicated solutions, here we have live, so our contact center collaboration solution implementation for one of biggest banks in Croatia. Then we have a few projects of BPM solutions for different banks and health insurance institution. And both ABC and Documenta are also kind of BPM BPM offering. And from third party, the only solution we mentioned, so Dynatrace implementation, like a sale in SaaS mode to new clients in Turkey. In payment, for e-commerce, payment gateway implementation integration for technology company of one big bank in Turkey. Additionally, some new clients and resellers for Paratika. So this is our payment facilitator in Turkey, and online payment solutions, which is ticketing platform for a client in Croatia. In processing, some new clients connected to our processing center from Bosnia and Herzegovina, and this is very important because traditionally this processing business we had mostly in Serbia, and now we managed to get clients in other countries. In more traditional business of ATM and POS related services, several deliveries and replacements of devices for banks in Croatia, Bulgaria, Kosovo, and Romania. From more interesting implementation of Android POS solution in Serbia. This is something what is very common, and we have many deliveries in recent quarters in Western Europe, but now it also appears in Southeastern Europe region. And some new clients for in-store payments in Croatia, directly not to the banks, but to merchants, some retailers from different type of retailers in sports equipment, clothing, and jewelry. So this shortly about deals, and let's move to results. To recall you, on this slide we present in first two columns results as we publish them in financial statements, so for full numbers, and then we have two columns which are we present excluding effect of hyperinflation accounting. This hyperinflation we do for Turkey, where inflation is above 100% cumulated for 3 years. And most of comments for business line countries we will be giving for those figures excluding hyperinflation. So on top line, on revenues, slight decline to 2 percent points, but with significant change in structure of revenues. Third party activities, so resale of software services and mostly equipment declined by more than 10 million euro, and it was almost fully compensated by growth of own software and services, what of course is very good information. On EBIT level, growth year-over-year 14%, in Polish zloty less 8%, and the reason for this difference is our exchange rate, simply a difference between euro and Polish zloty this year versus previous year. On EBITDA level, growth in percent is lower, but in absolute numbers, this growth is exactly the same. Simply saying there is no difference on depreciation this year comparing to previous year. Below EBIT, on net profit, operating profit level, I will comment full numbers. Here we have growth year-over-year, and when talking about financial activity, The biggest contributor to growth is hyperinflation gain, which is higher by 1.7 million euro year over year. And additionally, in 2022, we recorded in Q3 loss on sale of one entity in Macedonia. Of course, this was one-off, and this year we do not have this loss of around 700K. As for taxes, effective interest tax rate, it slightly increased by 0.5 percentage points, so nothing significant, but maybe a bit more I will comment on accumulated figures for 3 quarters. Let's move to results by business lines. So starting from banking, profitability very similar to the one from previous years, slight decline. With growing revenues by 1.3 million euro. As I mentioned, good quarter for multi-channel solutions, and this is the main contributor to the growth, but also core banking, where we have those implementation and merger-related projects. They continued. Those big projects were started last year, not from the beginning, somewhere during the year. So it's obvious that with time, with quarters, this difference year over year is lower than it was for Q1, Q2, where growth were really significant in banking. As for payment, we have here quite material increase of profitability by 19% to 19%. And this is due to two elements. One, results, they grew by 700K, and second is structure of revenues. This is what I commented at the beginning, but now let's go a bit more in detail. So total revenues in payment, they are lower by 4 million euro. Mostly ATM and POS, as it is visible here. In ATMs, we have drop on deliveries, mostly in Serbia, Slovenia, and Montenegro and Croatia, where we had deliveries in last year. This year, this drop was partially compensated by deliveries in Bosnia and Herzegovina, but it was not enough. And this is something what is typical, that those bigger deliveries of ATMs, they do not happen every quarter. As for POS line, very similar, also drop due to deliveries, but in this case, it is Western Europe, Spain. For Q1, Q2, and also last year, we commented that there are significant deliveries of Android POSs, and one of our clients replaced network to those new type of devices. And but during Q3 it didn't happen. There was no new orders, but I will comment this a bit later. We see that they will come in next quarter. So this drop in Western Europe was partially compensated by higher sale and deliveries in Czechia and Latin America, and what is very important, also by independent POS network and independent ECR network in Croatia and Romania. For now, we are presenting this combined in POS line, but we are considering to change presentation from next year and to show a bit more details on those important for us and growing lines. And e-commerce and processing, they are higher year over year. In e-commerce, 1.5 million euro growth. About 2/3 of this growth is in Turkey, rest is Romania and Serbia. And processing traditionally, as we commented for Q1, Q2, the growth is mostly in Serbia. Coming back to results, this despite decline of revenues, result on operating profit level in payments is 700k euro higher. And last line, dedicated solutions here, nice growth by 800k, also increased profitability year over year. This growth is thanks to both third party and own solutions, but more third party in this case. With improved profitability in BPM solutions, where we managed to without huge increase of revenues to optimize the operations and increase efficiency. Moving to geographies, so we have four geographies showing significant growth year over year. So first, going from those with biggest growth, Serbia 700k. Here we have growth mostly in payment. So this processing we already mentioned. But also good for post-related services in Serbia and independent ATM network. This was what we commented as one of highlights. Second country with biggest growth is Turkey, 700k. Again, here we have growth in payment, but in case of Turkey, it is e-commerce, but also we have improved efficiency and growth of result in dedicated solutions in CAST and in banking, where we have implementation of INAX solution to one of the biggest Turkish banks. A bit lower growth in Romania, but very nice, 500,000 higher results. And this is thanks to banking, core banking solutions, and also improved performance in e-commerce, mostly in web and mobile shops, which we offer in Romania. And this geography other, where is bundle of a few countries, we have 600k high results with two biggest contributors. One is Albania, where we have independent ATM network, which I mentioned, very nice growth thanks to growth of network and more transactions. Due to good touristic seasons. It was a record high season in Albania in terms of amount of tourists. But not only this, also Bulgaria contributed to this growth in area of banking, channel solutions, and Kosovo, where in smaller amount, but we have the implementation of our digital origination solution to one of Kosovo banks in Kosovo. And drops, because we have also drops. So we have drops in Iberia by 1 million euro. We have here two elements. One is smaller. In Q1 we closed cooperation for BPO, so business process outsourcing for call center for one of clients. This we described during Q1, but more important, this what I explained on payment business, that we have lower deliveries of POS terminals. So this is the main driver for lower results in Spain, so also in Iberia. So this is about Q3, sorry, and now accumulated results Q1 to Q3. Picture is pretty similar in terms of growths and trends. Maybe difference is on the revenues, the biggest difference. Here we have growth year over year, but what is very interesting, we have decline on third party, on resale of third party solutions, and significant growth on own activities. On operating profit level, almost 12% growth year-over-year, 9 in Polish zloty. Similar on EBITDA, up in absolute numbers, very similar growth as on operating profit. And when talking about net profit, here I will switch to those full numbers, including hyperinflation. On finance activity, result is lower by 700K year-over-year, mostly due to FX gains, which are lower this year than in previous year, by 1.6 million euro. Last year, we had pretty big FX gains in Poland due to the valuation of Polish zloty versus euro, and additionally, bigger FX rates in Turkey resulting from the valuation of lira versus dollar. In Turkey, we keep excess cash in dollars to make it secure. It was partially compensated by effect of recalculation of contingent considerations for acquisition and put options, and also this effect of a loss on capital transactions I mentioned for Q3. It also here has the same effect. When talking about taxes, taxes in absolute numbers, they increased by 1.1 million euro, but we should remember that during Q1 there was one-off tax in Turkey, and they called it earthquake tax, and it was for us around €500,000, one. If we exclude this, then effective tax rate, it increased from 15.4 to 16, so half a percent increase, nothing significant, and mostly related to higher dividends which we collected from entities outside from European Union. Going to segments, quite boring slide. Profitabilities year-over-year, almost on the same level, no differences. When talking about year-to-date result, biggest contributor to growth is banking. Here we have results higher by 2 million euro. One had good channels. This what I described for Q3, but also looking at Q1, Q2 results, very good for core banking due to implementation projects. For payment, here we have growth of revenues by 4 million euro, the same profitability. And when we look at structure of revenues, e-commerce and processing, very similar picture as for Q3, only amounts higher, and the same reasons for growth. So e-commerce mostly Turkey, but also Serbia, Romania, and in processing mostly Serbia. ATMs, similar picture as for Q3, and very similar reasons for drop, so lower deliveries. But in case of POS, picture is slightly different. We have growth year-over-year, and this is mostly thanks to Western Europe. In Q3, we had drop because there were no deliveries this year. But when we look at accumulated figures, we had those deliveries. They were, but in Q1, Q2, not in Q3. Overall, payments sector operating profit increased by 1.1 million euro year-over-year. And the lowest increase we have in dedicated solutions, 700K, with 11 million euro increase of revenues. Here we have growth in third party. And as for EBIT increase, it is both in own solutions and services and in third-party solutions. And let's look shortly at results by countries. So here we can see that Serbia is country with biggest growth year over year, more than 3 million euro. And all three segments have contributed to this growth. Biggest in payment, again, processing and in the independent ATM networks as in Q3. In dedicated solutions, very good year for own solutions and services, so mostly BPM class of software, and good banking thanks to core banking projects. It is also a very good year for Croatia, 1.1 million euro growth, mostly in channels where we sell mobile banking, but also good in dedicated solutions, improvement in BPM and live. For payment, it's mixture. In this classical business of ATM and POS, we have some drop year over year, but for IPD and ECRs, so those direct to merchant business, we have growth. Also good for Romania, 600K higher results, and other. Again, as I commented for Q3, growth is in Albania thanks to independent ATM network, and in Bulgaria, in Kosovo, in area of in banking. For drops, Turkey is biggest drop. This is related with this challenging macroeconomic situation, exchange rates, and inflation. We'll comment about this in a moment shortly. But this effect of drop is mostly coming from Q1, and from quarter to quarter we managed to improve it. And the second country with drop is Bosnia, with bigger drop, and this is mostly on dedicated solutions projects. So this was about results, and shortly about cash position and liquidity. So our cash balance is lower by 9 million euro than end of last year. But we should remember that 17 million euro dividend was distributed in July this year. On other levels, no big changes. Maybe worth to comment bank loans. We managed to decrease and repay part of loans, around 4 million euro. These were mostly loans related with financing working capital in different entities. On the deferred and contingent payments for acquisitions on those liabilities, balance is very similar, but of course we have some movements, but by certain types of liabilities. Some of them we paid, some other they were moved to short term due to falling in this 12 months period, and net cash overall is 6.7 million lower than last year. On receivables and liabilities, no big changes, nothing to comment. I think worth of commenting is inventory. They grew by 12 million euro. Big amount, 95% of this is payment, but this is due to inventories, POS terminals or ATMs we bought for projects. This is for specific projects. Most of this, like almost 8 million euro, are POSs for planned deliveries in Spain, in Iberia. And a big part of them will deliver still this year, some of them early next year in January. So we plan to that this position in coming months it will decrease. On top of Spain, also some bigger inventory in Serbia and Bosnia and Herzegovina. Moving to cash flow view, operating cash flow for last 12 months, 49 million. It is lower conversion ratio of operating cash flow to EBITDA, 72%. As you see here at the bottom, it's dropped. But if we take into account this 12 million of increase of inventories, if we exclude this, we assume inventory is flat, then the ratio would be around 90%. So basically, when it will be sold, we expect significant improvement. As for other lines here in cash flow, nothing material, no big changes, no slightly lower M&As. As in first 3 quarters, we haven't closed anything. And of course, we have surplus of debt service, the over debt increase, as I already commented in slide about balance sheet position. So this is about liquidity. Overall, we do not see any risks, and it should be okay. So let's move for outlook to outlook for 23. Piotr, will you take?
Hello, can you hear me?
Yes.
Sorry, I'm connected again, traveling, to some business destinations in the car, but I will try to quickly brief you on the outlook for the fourth quarter. Yes, as you see, we are traditionally showing the backlog coverage for the whole group, and then next 2 slides for dedicated solutions and banking, and separately for Payton. In both cases, we have a very reasonable backlog coverage for Q4. So the guidance or the outlook is rather positive for Q4. We had some shifts from Q3 even to Q4, and we don't see any reason to doubt or to say we should be conservative on the market outlook and analyst forecast as to what we will be showing in Q4. But additionally, on top of this, Michał, if you can show the 2 next slides, yes,
of course.
For ASEE and Payton, so the participants can see. But additionally, I will give you few briefs on on overall what's happening. Yes. So if we look at the last 10 or 12 years, we had tremendous diversification in 3 dimensions. One is geography. We started only in ex-Yugoslavia, Romania. Now we are from Turkey to Czech Republic, Spain, Portugal, and even Latin America. So the amount of revenues and profit generated out of the region dramatically diminishes the political risks and resulting economic risk. Yes. Second thing, if you look at the business lines diversification, we shifted very much into from equipment business that was a big chunk of the business today is completely negligible, into value-added businesses, so IP-based, recurring, SaaS-based, not only, but SaaS-based business in banking and dedicated solution, and in Payton into transactional-based business, yes, where we are expanding into processing, e-commerce, independent networks of terminals and electronic cash registers, having more and more recurring merchant business. So this completely changes the outlook of the business and structure of our revenues, not by product lines, but also by category of revenues and activities like SaaS type of business or transactional type of business. What else? Michał, you did not mention Portugal, have you? Yes?
No, I haven't.
We got a positive surprise. After 1.5 years, we got a acceptance or approval from the Central Bank of Portugal to buy a company named IvDemPay. It's an e-commerce payment provider for businesses in Portugal, one of the biggest ones. They generated, answering already your question, above 1.2 million euros in operating profit. We hope this company to be a growing company, and we are very happy the transaction is already completed after the approval. Yes. We are waiting on a couple of more deals working. Some of them, the bigger ones, will contribute to dedicated solutions in the billing area, in the area of geo surveillance of networks, all own IP base, very much helping our dedicated solutions portfolio not to use the third parties subcontractors, but to use our own IP. So we are very happy with this this progress and development. One more thing that for sure you spoke about the inflation effect in Turkey, but we had a mess this year in Turkey resulting from the fact that indexation with our customers traditionally was once per year, where employees insisted on the twice per year indexation of salaries. These indexations exceeded the inflation, so we had a natural pressure, huge pressure on margins, which is visible in our Turkish results. We already opened a plan how to renegotiate the contracts and the relationship with the customers to increase the prices and have twice per year price increases. This should contribute positively to the next year results in Turkey. So this is overall summary of what is happening, and me and Michał are open to questions if you have any. Gentlemen, you can speak if you wish, of course.
Yeah.
Or ladies, if they're
raise a hand and we will allow.
Mute. Where everything is very clear. So we will be showing maybe next presentations a bit different structure in showing more emphasizing the recurring revenue. Yes, but we have a raised hand. Michał, you can unmute. Can you clarify more on the M&A deals? Well, M&A deals, it's clarification. I can tell you these businesses, you know, you never know. We're working on one M&A deal in Turkey, yes, and we dropped it because the results of the company were much lower than they promised to us. So thus the valuation would be too expensive by our standards. The ones that are most likely to happen, bigger ones that I mentioned in the utilities billing type of solutions for all energy, smart billing, smart metering, and for water utilities. This we hope to happen by the end of Q4, the latest beginning of Q1. And the other one, software-based geo surveillance type of for networks company, we would hope probably to happen beginning of Q1. Yes, both of them, both of the companies are well known to our managers. They operate in our region, in this case Southeastern Europe, but they have huge international expansion potential because all of them have technologies cloud-based, cloud native, and we see this as a very right fit. But as with the acquisitions, like with the Portuguese one, we waited for 1.5 years for approval. With all others, or with the Turkish that we dropped, you know, I don't want to overpromise, so I wouldn't factor them now into the forecast before we do them, because you always have an unprecedented things that might happen in case of such acquisitions. Any more questions, please?
Monica, could you give Mark?
Hi there.
Okay.
Yeah, just a couple of questions. One, just on outlook, what it's looking like for 2024, and whether it's maybe too early for guidance, and also an outlook. I think you may have covered this on the Polish call, about sort of dividend outlook as well. That would be useful.
Sure. Okay. First one.
Looks like... Piotr, are you with us? Okay, I think Piotr has some connection issue as he's traveling. So as for dividend, oh, Piotr, are you back?
Hello.
Now we can hear you.
Yeah, I dropped out. Sorry for that. The network was killed. So I have late November, early December, we hope to have early backlog numbers. Now it's more guessing, but we do hope it's going to be a growth one. If the backlog growth or coverage will grow by 8 or 12 or 14%. It's hard to say, but we do expect growth here. Yes. Okay. The next one is hello. Can you hear me? Yes.
Yes,
The next
yes.
one is on the
Dividend.
question was
About
on the
dividend.
dividend. We do hope to grow dividends proportionally to the historic growth. So because our profits are growing, we do hope for the dividend payout for sure not to be smaller proportionally to last year, maybe even a bit bigger, but it's too early to say how big it will be. But definitely dividend we expect to grow compared to the 2022 based payout, yes. Proportionally similar or bigger to the results.
Okay, that's
Any
good
more
to hear.
questions?
Thank you.
Okay, Michał, thanks for taking. Apologies on my side, I joined just by the end, but in the plane. And guys, wish you a good day, and feel free to contact us directly if we are behind close period, so we can more freely discuss with you and answer any one-to-one questions about the outlook perspectives of the business. Thanks a lot.
Thank you.
Thank you. Bye.
Bye-bye.